Right now, folks, as we do each and every Tuesday and Thursday at 3:30 p.m. Eastern Time, we're going to talk to our man, Tim Ord. You can reach Tim at his website every trading day, folks, ord-oracle.com. And don't forget, he's got a couple of great webinars under that services tab, the secret science of market tops, how to identify them, and the 6 secret ratios every trader should know. We talk about some of those ratios during this segment each week. Tim Ord, good afternoon.
Good afternoon. Good afternoon. Still expect a pullback. We were talking last week. I thought we might see a consolidation. I still think that's in the cards. It's kind of been a weird market. Actually, we did have on this rally up, kind of going up here. You know, I shaded the areas in pink again, where the trend was in bullish territory. In other words, up above 1.2, that shows panic. Panic only forms at lows. And we've been rallying over the last couple of weeks, and there's really no trend readings up in that rally to keep the rally going. So I was expecting a pullback down into this panic area right here between 640, 650 on the SPY. I still think we're going there. Seasonality turns bearish starting today. It runs for about a week and a half. So I'm thinking we're going to get a pullback. At one point, I was going to look to short the market, and normally this market's really strong. I don't think the pullback's going to be much. Again, I think the buy signal is going to form in this area. The reason why I think it's going to form in this area is once you get panic in a price range, normally when you go back into it, the market will panic again. The trend will rise up to 1.2 or higher, and that'll say that area becomes support, and that's the area to buy, and that's what I'll be looking for. So I'll be looking for a trend reading on the close up around 1.2 or higher to signal the next low, and I think will form between 640, 650. So that's that. We have this is the VIX. SPX VIX ratio top window, next window down is the SPY. It's kind of the same thing going on here. Trouble with the VIX is it just warns you that a high is approaching, as it doesn't really signal the exact top. A lot of indicators are kind of hard. Picking tops is kind of hard. Picking lows, because to pick lows are a lot easier, because when you get into a low, the market panics, and panic only forms at low, so it's a lot easier. But sometimes these rallies can kind of go beyond what you think is possible. But I still expect this is a VIX. You know, when the SP is going up and this ratio is making lower highs as the SP is making higher highs, that's the bearish divergence suggests you're going into a high. So I think that's what's going to happen. But kind of the VIX is saying the same things. The bearish configuration made higher highs while the SPs has made or lower highs while the S&Ps has made higher highs. Here's kind of a back history what it looks like. This chart goes back to June. You can kind of see it there. So nothing real dramatic to talk about. Will I go short? Probably not. I think the best play for me is just wait for the pullback, get along again. And seasonality wise, it'll probably be this week. But September, October is probably the two most difficult markets of performance actually of the year. September, October always show up because you get the most whipsaws, so you kind of be careful in this time frame. So I was kind of being careful, but bigger trends up. I still expect higher highs once this pullback is complete, and actually it could be a pullback this month, and actually it could be a pullback in October. So it could be a minor trading range developing here, but I'll play the next pullback, and we'll probably go back up to the previous highs and maybe stall.
And the VIX, I was looking at it, I was waiting to talk to you, of course, on these days, and I always think about you when that VIX, maybe it even gets ahead of the market. It's not ahead of the market today, as in the market's trading lower, the VIX is trading lower. But yeah, the VIX is at 17. I was looking at it before you were coming on, Tim, and saying, man, September 3rd was the last time that we were this high in the VIX. And it's like, wow, 20 days ago. So we got some elevated VIX, of course, yeah.
Yeah, it's just trouble is the VIX, like I said, it just it warns you that a top is coming, but it didn't really tell you when it is. But actually, if you go back here, actually some of my subscribers pointed this out. Actually, you did too. I think last Tuesday or Thursday, you talked about the SPs were going up here, and that ratio was going up. So on a daily basis, so but the market still pushed higher probably for another 0.75%. So it didn't pick out the exact high, but it does warn you that something's coming. So I still think that pullback's legitimate. We can flip over the gold market. We can spend a little bit more time because I think there's some big stuff going on in the gold market.
Okay,
something we haven't seen since 2000. Me and Tom hit that. Your dad and I hit that market with a vengeance back in the day, and the only thing bad about it, I didn't get out as I should have back in 2012 at the highs, but I kind of fought the market there for a while. But so I've been through one of these cycles and what they look like, and I added more tools to it. But anyhow, this is the bottom window is the 18-day average of the advanced decline for GDX. And next window up is the GDX 18-day average of the up-down volume. And I put the times, this chart goes back to 2014. I put the times when both those indicators got above 40. And this was back in 2016 bottom. This was looks like about 2019. You got a decent rally. Here's 2000. That was a COVID crash right here. It went up. This one went up too. Anyhow, this one didn't work as a false one. But anyhow, what's interesting here? We got two of those readings. Actually, we'll flip back and forth a little bit here.
Okay.
But we got two of those readings above 40. This one happened late August, back in late, and it happened again in basically mid-September. And the chart doesn't go back far enough. I took us back as far as I could to 2014. Beyond that, I couldn't get any readings. So it's pretty rare. Well, actually, it only happened once, and it's currently happening. So what does that mean on a bigger time frame? Well, one thing, it's not bearish, but what does it mean? I think it really means adds to the bullish situation. Previous times when both those indicators hit 40, minimum you went up 3 months. Can't get this thing going. This one ran up about 6 months. This one went up 3 months. Oops, I hear the music. So I'll hold on.
Folks, hang there. We're going to come back with our mid Tim. We're talking some gold. And gold right now pushing $3,800. Futures trading at $37.95. Markets in the red. Stay tuned, folks. Tim and I will be right back. Welcome back, folks. We got the S&Ps right now off by 42. Markets in the red. We got gold right now pushing highs near 3,800, 37.98. All right, Tim, we were talking about gold, and we got a question. I'm going to can I throw this in there in the middle? Because obviously, just so we have some time, because I know they rush. Did you see the volume on the close on many equities on Friday in terms of in the gold market? We had some major volume, and we had a question in the den talking about it. But I was just wondering if you saw that and if you took anything from it as we jump around.
No. I wish I did, but I do watch the GDX volume and stuff. Volume. Actually, I have no opinion because I really didn't do analysis on it. But sorry about that. But anyhow,
no worries. There was just like Harmony had like 15 million shares on the close. They all had like an amazing number on the close at 4 o'clock on Friday. So it's interesting. But hey, this is the volume as it comes in. Please, so go ahead. And what ratio are we on right now? I'm sorry. There we are. Yeah. Okay. Go for it, Tim.
All right. So anyhow, when these two indicators got above 40, the market rallied, 6 months, 3 months. This one went 4 months. This one went 6 months. My point of the whole thing is here, the last time we got two of these indicators, both got over 40, one in late August, another in mid-September. They had a minimum 3 months, so you go basically this rally at a minimum should last into year end, if possibly into March. That's my point of the whole thing. So those are the times. Here's this is kind of a blown out chart to show you what happened, and this chart is today's chart. And to get a sell signal on this chart, you need a close below -10. If you notice, we're just hanging in super strong levels above plus 30. So there's a lot of gold stocks that are just rocketing still. They're not even taking a rest here yet. So anyhow, my point is, I think at minimum this rally will last till year end, if possibly into March. Then from there we'll get some sort of consolidation. But now let's get down into the valuations of what's going on. So this middle window, where's my? Oops, didn't mean to do that. Let me get my indicator here again. All right, this middle window is the monthly XAU gold ratio, and it goes back to I don't know, I think it's 1996. You can't quite see it, but anyhow, this goes way back, and so I took all the history I could. So this is a market from 1996 all the way up to the current time frame, and what I did was basically between 1996 to 2008. The market bounced around in a trading range, basically from 0.16 to 0.33, bounced around in this range here. And there's minor ranges that bounced around, but anyhow, it was like 26 years of a trading range on the ratio. So this is the XAU gold ratio. So in other words, if it got down to 0.15 area, that was a good buy because that shows gold stocks were cheap compared to gold. When it got up to 0.33, which is say that point right there, which had been that high right there, gold stocks were expensive compared to gold. So it bounced around the trade range, and I actually even took it a step further in these trading range. This one bounced around in a trading range for 8 years. This one bounced around at a high level for 4 years. This bounced around at a low level for 8 years. And finally it broke out down to the downside in 2000, looks like about 2009. And it just went through right down in the toilet, I guess you might say. And it started to bang around, and this chart's in the way here. See if I can get rid of it. Yeah, good. Looks like about 0.05 to 0.08. It's bounced around. It's bounced around in this region for 10 years, basically 2014 to 11 years. And it's going to break out at some point. Previous times, it usually lasts about 8 years before the breakout. This one's taken 10. So it's due for a breakout, either up or down. And obviously, I'm thinking up because I've got other charts that go back to 2013, or actually 1913, that when the lowest it's ever been before was 0.01 or 0.10, and we got down to 0.05. So that's basically over 100 years going backwards. But anyhow, so historically, these gold stocks are cheap, really cheap. And so what's that mean? Are we going to break out of this trading range? Yeah, I think we're actually going to break out and probably get a minimum of this 0.015 area. I think gold's going to slow down and gold stocks are going to speed up. Is what's starting to look like. And I got some... there's a couple of points I forgot. I didn't write them down, but I think this breakout's actually going on right now, and I think we're still early in the time frame. And we showed this chart last time. This is that bottom window's the monthly NDX. Next window higher is the HUI NDX, and this is a 12-year cycle. And the 12-year cycle is turned up. This one goes back to 1994 area, approximately where the data started. And this is the RSI of that ratio is here. And this is the first time the RSI has closed above 50 going back to 2012. So it was over 12 years ago, this RSI never got up. But once you break above 50, significantly, we're up around 60, almost 70 right now. They're 68.54 for almost 70. So we're breaking up out of this downward trend, and finally we're starting to go up. And it started in January 2024. So I'm thinking we're going to stay up. This RSI is going to stay up above 50, and what that implies, this ratio is going to be rising in general for the next 12 years. Where NDX may go up. What I'm saying is HUI will go up faster to keep this ratio going up. It doesn't mean that NDX has to go down, HUI has to go up. Both of them go up, but HUI will go up at a more rapid rate. And if you overlook, these gold stocks, they're all, I don't know, 80% of them are probably penny stocks. And so the market's really just got the crap beat out of them. And so I'm thinking the whole industry is changing. This is probably the dot-coms of the 2000s. I don't know if 1990 had the dot-com. They actually called them the dot-bomb. But a lot of those dot-com companies went from $0 to $100 or penny to $100. I think something similar is going to happen here, just because the ratio on the XAU gold ratio is so cheap. It's been so cheap for so long a period of time. That ratio is due for a bounce, and I think that bounce goes at least at 1.5. If we get above that, we may go a lot higher up to here, but we'll have to wait and see. The ratio is rising now, and I think this ratio will continue rising. I think gold's probably has had its run, majority of it, and I think now they'll switch to the gold stocks and keep this ratio going higher. So on a bigger time frame, I think this is the early stage of a major bull market.
Well, that's exciting stuff, man, if that's the case, because, boy, we are on quite a run. But, yeah, when you look at that chart, man, and, boy, those pullbacks sometimes in those equities, but that is quite a chart. Tim, thank you so much for the information, the education, as always. We look forward to talking to you on Thursday, man. Have a great couple days.
All right, thank you. Talk to you then.
Thank you. Bye. Folks, check them out, ord-oracle.com. Check out those webinars under the Services tab. I'll be right back.